Hello, my name is Mehta. I am accounts and a finance trainer from Uplatz. Today in this class we will discuss our one of the important topic of income tax, computation of total income and the tax payable. How we will compute the total amount which will be taxable under the Income Tax Act. And we will also calculate the amount of tax which is required to be payable by the assessee on such income. In our previous classes, we have discussed the income which will be taxable under the head of salary, house property, PGBP, other sources, and capital gain. Normally, the income is taxable. Any of the income which is earned by the assessee will be taxable. Any of these have. After the calculation of After the calculation of income under this head, we will calculate the total income of the assessee. Total income of the assessee. Then after on such a total income, we will calculate the amount of the tax which is required to be payable by the assessee. Means we will compute gross total income, and from such gross total income we will provide the deduction of chapter 6a, which we have already covered chapter 6a. And then after we will find net total income, net income of the assessee, on which we will calculate the amount of tax which is required to be payable by the assessee, which is required to be payable by the assessee. So now we will discuss, or we will start our discussion on the computation of total income. Means how we will calculate the total income and how we will calculate the amount which is required to be payable by the assessee on such a total income. Just like that, we will calculate income from salary, income from house property, income from business and profession, capital gain, and other sources. This is to be known as gross total income. This is to be known as gross total income. And then we will provide deduction under chapter 60. And we will find, after such a deduction, we will find total income of the assessee, and on such amount we will calculate the amount of tax. And from tax we will reduce rebate, relief if any, and then the net amount will be known as tax payable. Just like that, there is a assessee, Mr. Ram, and he has the following income: salary income. For the example, it is 5 lakh rupees. House property income, 2,50,000. Capital gain, 1,75,000. Business income, 1,25,000, and other sources, 75,000. The total income is 11,25,000. This is to be known as gross total. This is to be known as gross total income. This is to be known as gross total income less deduction under chapter 6a. Deduction under chapter 6a. Just like 80C, 1,50,000. 80C, 1,50,000. Just like LIC payment, PF payment, post office deposit, mutual fund. These are covered under section 80C. Under section 80C. 80D, any medical insurance premium. Medical insurance, health checkup. For the example, 20,000. And 80G, donation. Just like 75,000. 75,000. 80E, higher education. Interest on loan on higher education. For the example, 25,000. So the total deduction will be 2,70,000, and the taxable amount will be 8,55,000. We will calculate tax. We will calculate tax for the example. For the example, the tax is, or say if we calculate, then the tax will be 0 to 2.5 lakh. It is nil. 2.5 lakh to 5 lakh. It is 5%. 5 lakh to 10 lakh. It is 20%. And more than 10 lakh, it is 30%. So in this case, it will be 0. It will be 12,500, and it is more than 5 lakh. So 8,55,000 minus 5 lakh into 20%. Into 20%. So the tax will be 83 lakh 5,000. Rebate, there is no rebate. For the example, so the tax is required to be payable by the assessee is 83,500. Tax payable. Tax payable by the assessee will be 83,500 rupees. 83,500 rupees is the amount of the tax which is required to be payable by Mr. Ram. Payable by Mr. Ram on his income. So this is the process how we will calculate the amount, the total income which will be taxable under the capital gain, sorry, under the income tax, and how we will calculate the tax which will be payable on such income. Meaning of total income. First, we will discuss the meaning of total income. What is the meaning of total income? So the total income in the case of individual, the total income which will be calculated after providing the deduction under chapter 6A, means we will calculate gross total income, we will calculate gross total income, and from the gross total income we will provide the deduction under chapter 6A. After providing the deduction under chapter 6A, we will find total income. We will find total income. This will be known as total. This is to be known as gross total income, and after providing a deduction under chapter 6, it will be known as total income. It will be known as total income. As we have learned earlier, gross total income is the aggregate of income which is computed under the 5 head of income after giving the provision of clubbing of income, set off, and carry forward of losses. Means the gross total income means this is the gross total income is the total of the income which is earned by the assessee or which is taxable under the 5 head of income tax after complying the provision of clubbing. If there is any minor person, then the income of such minor person will be taxable, or it will be added in the income of his guardians, in the income of his parents. And we will also consider all the provision of carry forward of losses, set off of losses, and if there is any set off and carry forward, it will also be considered before calculating the total income of the assessee. So the gross total income is the total of 5 head of income, and total income is the gross total income minus deduction which is provided under chapter 6A. Under chapter 6A, after these income, the total income and the gross total income is calculated after considering the all the provision of clubbing or the provision of carry forward of losses, set off, and set off of losses, carry forward of losses. So the total income of the individual is arrived at after making deduction. Under chapter 6A, the total income of the individual is calculated at after making deduction. After making deduction under chapter 6A from the gross total income, deduction under chapter 6A are provided. Then we will calculate total income. And gross total income is the aggregate of income which is computed under the five head of income after giving the or after considering the provision of clubbing, after considering the provision of set off and carry forward of losses. So this is the total income of the assessee. Number two, income to be considered while computing total income of individual. Income to be considered while we will compute the total income of the assessee. Total income of the assessee. So what are the income and which income will be considered when we will compute the total income of the assessee? Capacity in which income is earned by the individual. Total capacity in which income earned by the individual. And next point is treatment of income earned in each capacity. Treatment of income which is earned in each capacity. So number one, in his personal capacity. In his personal capacity, when the income is earned by the individual in his personal capacity, then which income will be? Income from salary, income from house property, income from salary, income from house property, profit and gain of business and profession, capital gain and income from other sources. These all income will be or can be earned by the assessee in his individual capacity. In his individual capacity means under these five head we will calculate or we will calculate the amount of income, total income as a partner of firm. If there is an individual, he is the partner of any partnership firm. So in this capacity, which income can be calculated or can be earned by him? Number one, salary income. Number one, salary income. Number two, bonus. Number one, salary income and the bonus which is received by the partner, which is received by the such individual from the partnership firm, from the partnership firm, and it will be taxable as business income, and such will be taxable. It will be taxable as business income. Means there is a partner. For the example, there is a Mr. Sohan. There is Mr. Sohan and he is a partner. He is a partner in a ABC company, ABC Limited, or sorry, he is a partner in the ABC partnership or LLP. And in such a partnership firm, Mr. Sohan, he has received salary of rupees 6 lakhs, bonus salary of rupees 6 lakhs. Sorry. And bonus for the example 1,50,000. So the total amount will be 7,50,000. So the 7,50,000 will be considered as business income. It will be taxable in the hands of Sohan, in the head of under the head of PGP. So when there is any person individual, he is working as a partner in the partnership firm and he is earning the amount of salary, bonus or bonus etc from such partnership firm, then such amount will be taxable under the head of PGP. Then such amount will be taxable as his business income. It will be taxable as his business income and it will be taxable under the head of PGB. Number two, interest on capital. Number two, interest on capital and loan to the firm. Interest on capital. Mr. Sohan, he earned the interest on capital, the capital which is contributed by him. He received interest on the capital or interest on loan. Then it will be taxable as business income. It will also be taxable as business income. Interest on loan and interest on capital. Just like Mr. Sohan, he has provide the loan to LLP for rupees 2,50,000, and on such loan he is earning the income of by the way of interest. So 12,500 rupees, it will also be considered as business income. It will also be considered as business income because it will be considered that the partnership firm, it is the business of the assessee. It is the business of Sohan. It will be considered as business income. So any salary, bonus, interest on capital, interest on loan, which is earned by the individual as a partner of partnership firm, then such income will be taxable. It will be considered as business income of the assessee, and it will be taxable under the head of PGBP. The income mentioned in point 1, salary and bonus income, and interest on capital will be taxable to the extent they are allowed as deduction to the firm. Means it will be allowed to the extent the deduction which is allowed in the partnership firm, up to the deduction which is allowed in the partnership firm. Number 3, share of profit in the firm is exempted in the hands of partner. Means the profit, the partnership firm profit, it will be distributed between the partner and it will be taxable in the hands of partnership, but it will be exempt in the hands of such individual, in the hands of partners. Means for the example, as per such example, Mr. Sohan, he is the partner in ABC LLP, and in such a LLP there are 3 partners: Sohan, Mohan, and Ram. There are 3 partners, and they contribute and they earn one third, sorry, and they contribute one third, one third of profit. Wait. Earning one third, one third, one third, or the total amount of profit of the firm, profit of firm. For the example, it is 3 lakh rupees. It is 3 lakh is the amount of profit of such LLP. So 1 lakh, 1 lakh, 1 lakh, 1 lakh, and 1 lakh. It will be distributed or it will be segregated between the partners. It will be segregated between all these partners. So the income of such rupees 1 lakh, which is earned by the profit, which is earned by Mr. Sohan, Mohan, and Ram, it will be considered as a partnership profit, and the partnership profit will be taxable in the hands of partnership firm. It will not be taxable in the hands of partner. Means such amount of profit will be exempted in the hands of Sohan, Mohan, and Ram. It will be taxable in the hands of partnership firm. So the income, so the profit of the partnership firm, which is earned by the assessee in his individual capacity, it will be exempted in the hands of such person. It will be taxable in the hands of partnership firm. Number 3, as a member of HUF, if there is any individual, he earned the income as a member of HUF, means he is the member of HUF and he earned the following income, just like share of income or part of HUF is exempted in the hands of member. Means he has earned, he is the member, there is a individual, he is a member of a HUF and he earned the profit, he earned the share of profit of such HUF, then such profit will be exempt in the hands of such member. It will be exempted in the hands of such a member. It will be taxable in the hands of such a HUF. The profit will be taxable in the hands of HUF. Number 2, income from a impartible estate of HUF is taxable in the hands of holder of the estate, who is the elders member of the HUF. Means if there is any income from the impartible estate of HUF, means there is any income which is earned by the HUF from any impartible estate, from the impartible estate, then it will be taxable. It will be taxable in the hands of the person who is the holder, who is the holder of such asset, who is the holder of such estate, and who is the Eldest member means who is the karta of such HUF. Means if there is any HUF earn any income from any property from any state, then such income will be taxable in the hands of karta, in the hands of person who is the holder of such state, of such state. Number two, income from self or self acquired property covered into joint family property. If there is any member of the HUF, there is any individual, he is a member of HUF, and such person earn the income from self acquired property. He earned the income from the self acquired property, and such property is converted into the joint family property. Then on such a self-occupied property, self-acquired property, the income is earned by the assessing, it will be taxable in the hands of such a member because it is earned by him from his property, his self property, his self-acquired property. Then such income from the conversion of self-occupied property into the LLP property. Then such income will be taxable in the hands of such individual. It will be taxable in the hands of such individual. Income of other person included in the income of individual means when there is any income of the other person and it is included in the income of the assessee, means just like clubbing provision, the income of minor child will be included in the income of parents. Means transferring income where there is a transfer of income without transfer of assets, means there is the transfer of income, the assessee transfer the income, but the asset is not transferred by such assessee, then such income will be taxable in the hands of such a person. Means Mr. Ram, he transferred, for example, Mr. Ram, he transferred the rent from house property, rent of rupees 50,000 rupees per month to his wife, but the house property in the name of Ram, house property house property in the name of Mr. Ram. So in this situation, the income is transferred by Mr. Ram to his wife, but the property is in the name of Mr. Ram. So in this situation, the provision of the clubbing will be applicable. Means such income will be taxable in the hands of Ram. Such 50,000 rupees per month will be taxable in the hands of Ram. It will not be taxable in the hands of his wife. It will be taxable in the hands of Mr. Ram. So the transferring income where there is that transfer of income without transfer of asset, means that assets is not transferred but the income is transferred. So the person who will transfer such income, the income will be taxable in the hands of such person. Income arising from the transfer of from a revocable transfer of assets. When there is any income which is arise to the transfer of revocable transfer, the transfer of revocable transfer of assets, the revocable transfer of assets, then such income will be taxable in the hands of such assets. In the case of point 1 and in the case of point 2, income is included in the hands of transfer. In point 1 and in point 2, the person who will transfer the income in the name of another person, then such income will be taxable in the hands of transferor. It will be taxable, as per the example, it will be taxable in the hands of Ram, not in the hands of his wife. It will be taxable in the hands of Ram. Income of spouse mentioned in section 64 subsection 1. Income of spouse means, as per section 64 subsection 1, means there is a spouse, she is working in a company in which, in a organization in which the spouse, his spouse or her spouse is has a substantial interest. His wife does not have any qualification, means according to such job, but she is earning money, so the salary which is earned by his wife from the job will be taxable in the hands of such a person, because she is doing the job or she is earning the money from the job only, because Mr. Mr. A, he has a substantial interest in such organization. So the income of his wife will be taxable in the hands of Mr. A. It will be taxable in the hands of Mr. A. Just like for the example, there is an organization XYZ, and in such XYZ, Mr. A, he is the partner or he is the director. He is the director or he has a substantial interest in the organization. His wife B, she is a doing job or she is a in job in XYZ, and she is earning 30,000 rupees per month. But she does not have the qualification, means she is not qualified for such job. So in this situation, such a 30,000 rupees per month for the 12 month means such a 3 lakh 60,000 will be taxable in the hands of A. In the hands of A. This is the income of a spouse. Income from asset transfer otherwise than adequate consideration to son's wife or any other person for the benefit of son's wife means when there is any person he transfer any asset to the another person without any consideration or for adequate consideration other than adequate consideration for the benefit of son's wife, then the person who will transfer such assets, the income from such asset will be taxable in the hands of such a transfer. It will be taxable in the hands of such a transfer. It will not be taxable in the hands of son's wife. It will be taxable in the hands of transfer. Income of minor child will be taxable in the hands of its parent or its guardian. But if there is any income which is earned by the minor child from his own capacity, from his technical skill, then it will not be included in the income of his parent. So these are those income which are earned by the individual in the different capacity, and these income will be taxable in the hands of such person, in the hands of such individual. So now we will discuss point number 3, computation of total income and the tax liability of individual. First, we will discuss the computation of total income and the tax liability in the hands of or in the case of individual. So the total income, first we will calculate the gross total income, and from the gross total income we will provide the deduction under chapter 6A. From the gross total income we will provide the deduction under chapter 6A. Under chapter 6A, after providing the deduction under chapter 6A, we will calculate or we will find total income of the assessee. We will find the total income of the assessee, and such total income of the assessee will be computed as per the Income Tax Act 1961. Such a total income will be computed by the assessee as per the provision of Income Tax Act, as per the provision of Income Tax Act. So the procedure how we will compute the total income of the assessee and how we will compute the tax liability of such income of such individual, we will discuss in detailed form. Just like first we will determine the residential status of the individual. First we will determine the residential status, means he is resident or non-resident, resident or ordinary resident. We have already discussed in our another class, in our previous class, the concept of residential status. So to calculate the taxable income, to calculate the tax liability, first we will determine the residential status of the assessee, because if there is any person who is the resident of India, then all the income of such person, all the income of a resident person will be taxable in India. It will be taxable in India. It will be taxable in India. And if there is any person who is non-resident of India, but he earn any income, but he earn any income in, but he earn any income, but he earn any income in India, accrue any income in India, and receive any income in India, then it will be taxable in India. Then such income will be taxable in India. So before determining the computation, before determining which income will be taxable, it is very much important to understand the residential status of such assessee. Residential status of such assessee. So the residential status of the person is required to be determined to calculate the total income which will be taxable under the head of income tax. Means to compute the total income of the assessee, it is very much important to determine the residential status, to determine the residential status of the assessee. In the case of individual, when the individual stay in India for the period of more than, for the period of 182 days or more than 182 days in the previous year, then he will consider as resident of India. Or he stay in India for the period of 365 days in just preceding 4 years and 60 days, minimum 60 days, or 60 days in India in the current financial year or current previous year, then he will be considered as person resident of India. So if there is any person, he stay in India, if the individual stay in India for the particular days in the previous year or earlier previous year, then he will be considered as resident. He will be considered as resident. If Mr. Ram, he stay in India for the period of 200 days, then he will be considered as resident of India. Mr. Ram, for the example, Mr. Ram, he stay in India in financial year 2019-20 for the period of 210 days. Then he, and after these days, he went to USA. He went to USA, so he will be considered as a resident of India. He will be considered as a resident of India because he stay in India for the period of more than 182 days in the previous year. Then he will be considered as resident of India. The individual HUF can either be the individual, and the HUF can be, it may be resident and ordinary resident, resident and ordinary resident, resident but not ordinary resident, resident but not ordinary resident, and resident and non-resident and non-resident. So these are the status. Means the individual and the HUF, it may be resident and ordinary resident, resident but not ordinary resident, and non-resident and non-resident. An individual who is a citizen of India, if there is a person who is a citizen of India and his total income other than income from foreign source. If there is any person who is a citizen of India and his total income other than foreign income is exceed 15 lakh, 15 lakh during the previous year, then he will be deemed as resident of India. Then such person shall be deemed as person resident of India in the previous year if he is not liable to tax in any other country or territory by the reason of domicile and or resident or any other criteria of the similar nature. Means if there is any person, just like there is Mr. Sohan and he earned the income other than foreign income other than foreign income, it is 18 lakh 50,000. 18 lakh 50,000. So he will be deemed, Mr. Sohan will be deemed, he is a citizen of India. Citizen of India. He is a citizen of India, and it will be deemed that he is a resident of India. If resident of India, if his income in the previous year is more than 50 lakh, more than 15 lakh, excluding the income of foreign currency, foreign country income. But there is a condition that such income should not be taxable under any other country. It should not be taxable in any other country on the basis of residential status, on the basis of his earning on the means on any other basis, such income should not be taxable in outside India. If it is not taxable in any other country, then he will be considered as person resident of India. He will be considered the person resident of India, and such income will be taxable in his hand in India. Then such income will be taxable in India. So such income should not be taxable in any other country. In any other country on the basis of his residential status or not. So if his income is more than 50 lakh other than foreign income, then such income will be, then such person shall be deemed as person resident of India without on the basis of number of days. Without on the basis of number of days, he will be considered as person resident of India, and the income which and such income will be taxable in India. If it is not taxable in any other country, then person other than individual and HUF can either be resident or non-resident. Person other than individual and HUF, just like AOP, BOI, company, firm, it may be individual, it may be resident or non-resident. In the case of company, firm, AOP, BOI, cooperative society, it will not be resident, ordinary resident, or resident but not ordinary resident. It will be only resident and non-resident. The Indian company is the resident of India. The Indian company is the resident of India. The company not being an Indian company and having its place of effective management in India and in the and participation in India, then it will be considered as a resident of India. Means if there is any organization and the organization has the principal place or the effective management in India, and all the decisions which are related to such company are taken in India, then such company will be considered as Indian company. It will be considered as Indian. It will be considered as resident of India. If the place of effective management and all the decisions which are related to such company are taken in India, then it will be considered as person. Sorry, it will be considered as company resident in India. The determining factor for each other assessee, the determining factor for every other assessee is the place where the control and the management of the affairs are situated. Means in the case of every assessee, in the case of other assessees, just like AOP, BOI, just like AOP, BOI, to determine the residential status of these person, to determine the residential status of any other person other than individual, HUF, and company, we will check control and the management of the affairs. If the control and the management of these organizations in India, then it will be considered as resident of India. If the control and management is outside India, then it will be considered as non-resident of India. If it is in India, control and management of such organization is in India, then it will be considered as resident of India. If control and management is outside India, then it will be considered as out in non-resident. It will be considered as non-resident. The residential status of the person determine the scope of taxable income. On the basis of residential status, we will determine which income will be taxable in his hand. For the example, the income which is accrued and arise in outside India or received in outside India, it will be taxable in the hands of resident and ordinary resident, but it will not be taxable in the hands of non-resident. Means if there is any income which is earned by a person and such person he is the resident and ordinary resident of India, then each income which is earned by him in India as well as in outside India will be taxable. But if there is any person who is a non-resident, and such a non-resident earn any income in outside India, then it will not be taxable in India. Only the income which is earned by him in India, received by him in India, accrue in India or receive in India, then it will be taxable in India. So in the case of resident, each and every income will be taxable in India. In the case of non-resident, only the income which is earned, arise, receive in India, it will be taxable in India. Step number 2, Classification of income under a different head. First, we will identify the income. Then after, we will classify these income into the heads. There are total 5 heads. There are total 5 heads of income. Salary, house income from house property, profit and gain of business or profession, capital gain, and income from other sources. There are 5 heads of income, and the income of the assessee will be taxable in these heads. In these heads. So before the calculation of taxable income, total taxable income, we will bifurcate the income of the assessee in these following head. In these following head. The income of the person should be identified and grouped under these 5 heads according to the nature of income. According to the nature of income, if this is the salary income, then it will be taxable under the head of salary. If the house property income, it will be taxable under the head of house property. Each head of income has the charging section. Each head of the income had charging section. Deeming provision are also contained under certain heads. Deeming provision are also there, and by which specific item are sought to be taxed under those heads. On the basis of deeming provision, some specific items are required to be taxed under these heads. For the example, if there is any bad debt which is allowed as deduction in the earlier year, if there is any amount of bad debt which is allowed as expenses in the earlier year, but it is recovered, but the amount is recovered in the subsequent year. In the subsequent year, that it will be considered as business income of the assessee. It will be considered the business income of the assessee if there is an organization, for the example, there is the organization ABC, and such organization claim 2,50,000 rupees as bad debt and bad debts, and from such a 2,50,000, 50,000 are received in 2019-20. Then such 50,000 will be considered as business income. It will be considered as business income, and it will be taxable in the hands of assessee ABC under the head of PGBP, and it will be taxable in the year when such amount it will be recovered, when such amount is recovered. Number 3, the charging section and the deeming section would help you to determine the scope of income for the particular head. Means on the basis of charging section and on the basis of deeming provision, we can identify or we can determine the income which will be taxable under the particular head, which will be taxable under the particular head of income. So on the basis of this, we have discussed part 1 of computation of total income and tax liability. There are some other parts in which we will discuss other steps of computation, how we will compute the total income of the assessee and how we will determine the tax liability. So first we will determine the residential status of the assessee, and we will discuss, or then we will calculate the incomes of the assessee. Then we will bifurcate or we will classify all these income of the assessee into the respective head. There are total 5 heads of income: salary, house property, PGBP, capital gain, and income from other sources. On the basis of this, we will calculate the income which will be taxable, and we will calculate the total income of the assessee. So there are some other parts of such concept, of such topic. Kindly consider all the videos of such topics so that you can understand how we will calculate the amount which will be taxable under the Income Tax Act. Thank you so much. Bye-bye and have a nice day.